So, Shakira. She's in trouble with the Spanish tax authorities. She recently made a deal. Now, what can we learn from her, and how can Shakira's experiences help you avoid similar issues? Hello there. My name is Javier Khoraim, and I'm a research and development associate here at Nomad Capitalist, where we help 7- and 8-figure entrepreneurs go where they're treated best and plan their affairs in order to minimize and legally avoid taxes as much as possible. Now, today I want to use the example of pop sensation Shakira to illustrate how carefully we have to plan the tax structures of different clients in order to achieve the desired objectives. Now, before we move forward, I want to make a big disclaimer. This video is done based on generally available information. I have not consulted with the Shakira legal team, nor have I had access to any detailed information regarding Shakira's financial structure. So everything that I will be discussing in today's video is based on widely available information through the press of what Shakira allegedly did, what she admitted doing, what her main arguments were in the Spanish tax courts, and from there we will derive some of the major lessons that we can basically learn from this great music sensation. So first of all, let's give a bit of context. So for those of you who may perhaps not know, Shakira is an international pop sensation. She was born in Colombia, and since the early 2000s, if I'm not mistaken, she has been enormously successful, accumulating millions of dollars, millions of euros worth of wealth, and she has basically topped the album list in both North America and Europe for several years now. So essentially what happened? So Shakira is Colombian born. That means that she was essentially a Colombian tax resident in the early stages of her adult life. After she became very successful, she essentially deregistered as a Colombian tax resident. So Colombia has a system whereby if you are a tax resident of Colombia, you can choose to deregister and just move your tax residence to another country. As Shakira was growing more and more successful, she started to basically grow a more complex tax structure in order to help her obtain privacy and also to potentially minimize taxes overall. So what did Shakira do? Shakira basically focused mainly on her offshore corporate structure to hold her wealth and to hold her assets. So what did she do? The first thing she did was she claimed tax residence in the Bahamas. So the Bahamas is a country that we've spoken a lot about here in this channel. It is one of the few remaining traditional tax havens, which means that the Bahamas does not levy any sort of income tax, capital gains tax, inheritance tax, wealth tax, corporate income tax, or any kind of tax for that matter, except for property taxes on any local property situated there, value-added tax if you consume things there, and there are a couple of import duties that have to be paid if you import things into the Bahamas. For an international pop sensation like Shakira, having a tax residence in the Bahamas is actually a pretty interesting option. And in fact, she went for that option using a real estate investment path, which we have actually helped many of our clients go through in order to obtain residence and subsequent tax residence in the Bahamas. So what Shakira did is she purchased a villa in the Bahamas and therefore claimed that her permanent home was in the Bahamas. Now, once that personal side of the equation, that personal side of the quadrant was done, Shakira then decided to set up an offshore corporate structure that was pretty complex and involved companies in Luxembourg to benefit from special deals on intellectual property where it was taxed at rates that were as low as 5% or even lower. And then she set up multiple subsidiaries in countries like the British Virgin Islands and the Cayman Islands, where, again, Nomad Capitalist has helped numerous clients set up offshore structures and different subsidiaries that serve different purposes. So all of this up to now is actually very well thought out. She was a tax resident of the Bahamas, which meant that she was not subject to any tax on her personal side. And then she had a corporate structure which also allowed her to obtain enhanced privacy, better asset protection, and also optimize her taxes at the entity level. However, where things started to become more complex for Shakira is when she actually started to go out with the soccer player from the Barcelona team, Gerard Piqué, if not mistaken, and she started to spend substantial time in Spain. Now, here at Nomad Capitalist, we often talk to our clients about it is equally important to establish tax residence as it is to establish tax non-residence in other countries. So in today's world, where it's not as simple as saying, I just live in the Cayman Islands or I just live in the Bahamas, it is extremely important for no high-tax Western country to have the ability to claim that you are also a tax resident of their jurisdiction. So this is what happened to Shakira, essentially. Everything was okay on the Bahamian side, but as she started spending more time in Spain and especially establishing more ties in Spain, then things started getting a bit more complicated. So Spain has a dual system whereby they can consider you a tax resident if you spend 183 days in the country, which is, I think, something that most of you watching this video would be familiar with. If I spend 6 months or more in a country, I'm automatically deemed tax resident. However, Shakira also established ties. So we've already mentioned she entered into a very formal relationship with the aforementioned soccer player. She also had 2 kids, whom, if I'm not mistaken, were living in Barcelona during at least a vast period of the year. And on top of that, she had assistants in Barcelona. I believe she purchased a home there. So she had established some links that really made her connection to Spain closer and closer. And what ended up happening was that the Spanish tax authorities ended up investigating her, and she was eventually charged for tax evasion, tax fraud, and she was brought before the Spanish tax courts for allegedly having failed to pay, I believe it was around $16 million in taxes. So what did the Spanish authorities say? The Spanish authorities essentially mentioned that because Shakira was not spending sufficient time in the Bahamas and had closer connections to Spain, and on top of that, they went through extraordinary great lengths to actually determine that she was present in Spain for more than 183 days in a number of given years, they actually approved that Shakira was basically a Spanish tax resident as opposed to a Bahamian tax resident. So what are the consequences of this? Well, unlike the Bahamas, Spain levies an income tax, Spain levies a wealth tax, and Spain has controlled foreign corporation rules, or as they would call them, international fiscal transparency rules. So all of that translates into the fact that now that her personal side of the quadrant was no longer properly managed and planned for, now the entire corporate side of Shakira's structure was no longer valid. She could keep her companies in Luxembourg and the BVI and the Cayman Islands and all of these fancy jurisdictions that she was working with, but unfortunately, due to CFC rules, all that income would basically just flow down to her as a Spanish tax resident, and she would still have to paid taxes on that income. Now, there are some complexities around this, and there are some rules that have to be taken into consideration, especially when it comes to Luxembourg. Spain has a couple of special, let's say, exemptions when it comes to controlled foreign corporations in the European Union. In order for somebody to make a full analysis of what Shakira's situation was, we would need access to more specific court documents and such. But overall, the reality is that the Spanish tax authorities are obviously far more aggressive than the Bahamian ones, and that going after Shakira was a bit of how to show that everyone has to comply with tax laws, even pop stars. So what does that mean for you as the average global investor, as the global entrepreneur? Well, the lessons we can learn from Shakira are essentially the following. Number one is that corporate structures are great, and you can have multi-layer corporate structures. We help set those up for you if you wish. But regardless of where your corporations are and how good your corporate structure is, it is also vital for you to meet 2 requirements. Number one, you have to establish a tax-friendly residence for yourself. That is the first step in any Nomad Capitalist plan, is understanding where you will be going, where you will be spending time. Then the second part of that equation is where I want to spend time as a tourist, because I like the country, because I like to spend time there as part of my lifestyle, but where should I avoid becoming a tax resident? Countries like, for example, Spain. It is as important to determine how to avoid becoming a tax resident of countries A, B, and C as it is to determine to be tax resident of country 1, 2, or 3 for the benefits that they potentially offer. I read in an article recently that Shakira is relocating or has recently relocated to Miami, Florida, and has left Spain. In fact, my understanding is that she even said farewell to her fans in Spain. Now that she has, as my understanding is, relocated to Miami, Florida, she will be subject to a whole new series of rules. And this is where my American friends, you might want to pay attention because this one is for you. So now that Shakira has sorted all of her issues out with the Spanish tax authorities, she accepted to pay, I believe, an amount in back taxes and then a fine, but everything is settled on the Spanish side, she has decided to now relocate to Miami, Florida. Now, this may be due to personal reasons. I'm not here to judge Shakira on any personal choices that she may make. Miami is a fantastic city. However, in terms of taxes, she is heading into one of the most aggressive tax systems in the world. So now that Shakira is a resident of Miami, Florida, the only good news for her there is that she has resettled to one of the friendliest states in terms of taxes in the US. So Florida obviously does not levy a personal income tax, does not levy a personal inheritance tax. Florida does not levy a personal wealth tax or a personal capital gains tax at the state level. So basically, the state of Florida itself is among the better choices in the United States. However, she will still have to deal with US federal tax rules. Now, obviously, I'm not aware, and I'd have no way of knowing if Shakira has in any way altered her offshore corporate structure to adapt to now being a US resident. However, what can be said is that if she keeps the same structure, Shakira has to understand that basically this structure can provide her a degree of asset protection. It can provide her a degree of privacy. It can provide her a degree of discretion. However, in terms of tax savings, it's not going to be that much. So basically, Americans and US persons for tax purposes are subject to two major provisions when it comes to controlled foreign corporations. And we have other videos discussing this further in length. But just as a general and broad recap, Shakira now has to focus on potential subpart F income and potential GILTI inclusions. So subpart F income, in a nutshell, includes basically any form of income earned by a CFC that falls either under the category of personal holding company income, which may affect Shakira, meaning any company that holds shares, investments, royalties from her music, rights to her image, any sort of assets that fall into this kind of category will essentially be taxed in the United States via a subpart F inclusion that Shakira will very difficultly avoid now that she is a US tax resident. In addition to that, if she has companies in the United States and she wants to shift a certain degree of those profits to other countries by using companies to provide services from offshore or to use companies that basically act as intermediaries for her merchandise, that may also pose some issues as there may be potential subpart F inclusions on that side. Potentially easier to avoid depending on where the companies are run, if they're providing the services from the country of incorporation or things of that nature. There might be a bit of room there, but still a bit complicated and far more complicated than obviously having been a tax resident of the Bahamas. Then obviously, Shakira now has to deal with GILTI inclusion. So Shakira is a pop artist. So like many of you out there, if you have a digital product like Shakira, so where does Shakira's wealth come from? It comes from her music, it comes from her image, it comes from things that are intangible. Like for example, if you're out there as a US citizen and you're working as a consultant, you're working as a professional video editor or a stock trader, you may have your own company, you may have your own business, but you do not have a lot of hard assets, meaning that you do not own a factory, you do not have a ton of computers and equipments and vehicles and things of that nature. And for people who run businesses that are very digital in nature or very intangible in nature, like Shakira, then GILTI inclusions might be very aggressive. So again, in a very, very summarized nutshell, GILTI basically forces you to include any income that is above a 10% return on qualified business assets and investments, which essentially are hard assets. So if Shakira has an offshore corporation and that offshore corporation only owns intangible assets like rights to her music, but again, no tangible assets of any nature, then essentially all of that income has to flow down again to Shakira in the form of a GILTI inclusion, even if she avoids all kinds of subpart F income. All that GILTI is going to flow down to her and she has to pay tax on that in the United States. Now, are there ways to minimize it? Sure, she could potentially set up a US holding company and claim a 50% exclusion on that, and maybe she can drive down taxes further that way, and provided that all the companies are managed offshore, sure, there might be some room for tax planning there. But overall, now that she is a US tax resident, Shakira is gonna have a much more difficult time with offshore tax planning. So basically, Again, what are the lessons, the major lessons we can learn from Shakira? Number one is that offshore tax structures are great and they can be used to enhance privacy, asset protection, and potentially minimize tax, provided that your personal tax residence is also in a place that is friendly to your corporate structure. So if you want to learn more about structures like the one Shakira used, if you want to learn more about the mistakes Shakira made so you don't make the same mistakes, and if you want to learn more about how you can create a plan that basically encompasses both your personal side and your business side, feel free to subscribe to our YouTube channel, follow us on Instagram, go to our website, and consider becoming our client so we can help you go where you're treated best and make sure that your hips don't lie.